Ever think about why the US dollar, which used to be the most important currency in the world, is now having problems that have never been seen before? The dollar's supremacy is being called into question as inflation rises, geopolitical conflicts rise, and new technologies come out. Just what does this mean for your funds and the world economy? The US dollar is the most common currency used for trade and other foreign transactions. It is also the world's main reserve currency. But its power is in doubt, especially since the crisis between Russia and Ukraine is still going on. The risk of de-dollarization has come back into focus because of changes in geopolitics and geostrategics. This is something that has happened many times in post-war history. Some countries are wary of becoming too dependent on the dollar because of the US sanctions against Russia. In addition, rising interest rates make it more expensive for emerging countries to use the US dollar, which makes some of them trade in other currencies. After Brazil and Argentina, Bolivia was the third South American country to use the Chinese renminbi to pay for imports and exports in July 2023. What could happen if countries stop using the dollar? What might this mean for trade and markets around the world? The risk of de-dollarization, which is a periodically recurrent theme throughout post-war history, has returned into focus due to geopolitical and geostrategic shifts. What does de-dollarization mean? To put it simply, de-dollarization means that dollars are used much less in international trade and financial transactions. This means that there is less desire for the greenback from individuals, businesses, and institutions. This would make the dollar-denominated global capital market less powerful. This is where people from all over the world borrow and give dollars. Two things could happen that would hurt the dollar's standing. The first group includes bad things that happen that make people doubt the safety and security of the dollar and the US position as the world's most important economic, political, and military power. For example, if there's more division in the US, it could hurt the country's reputation as a safe haven for people around the world. Positive events happening outside of the US, like economic and political reforms in China that boost the credibility of alternative currencies, are the second reason. Wise said, a candidate reserve currency must be seen as safe and stable and must offer a source of liquidity that is sufficient to meet rising global demand. What would happen if the dollar was taken away? Basically, getting rid of the dollar would change the balance of power between nations. This could change the world economy and markets. The effects would be strongest in the US, where de-dollarization is likely to cause a wide drop in the value of US assets and poor performance compared to the rest of the world. If people sold or moved their money away from US markets and lost a lot of faith, it would hurt outright and relative gains on US stocks. There would probably also be upward pressure on real yields if investors sold some US fixed income or if foreign reserve allocations changed or went down. But it's not clear what effect de-dollarization will have on US growth. A dollar that is essentially weak could make the US more competitive, but it could also make foreign investors less likely to put money into the US economy. Also, a weakening dollar could theoretically cause inflation in the US by making imported goods and services more expensive, though benchmark estimates show that these effects may not be very big. Even though US trade shares have been going down over time, the dollar is still the most important currency for transactions. De-dollarization, on the other hand, can be seen in FX reserves, where the dollar's share has dropped to a new low of 58%. Currency markets moving away from the dollar. Over time, de-dollarization could make institutions, investors, and businesses less interested in the dollar, which could cause its value to drop. De-dollarization could also lead to more volatile exchange rates if there is a specific reason for the move. This is because more than 60 currencies are tied to the dollar. Even though there are some signs that currency markets are becoming less dominated by the dollar is still the most important asset. Meera Chandan, co-head of the Global FX Strategy Research Team at JP Morgan, said overall dollar use has decreased, but it remains within long-term ranges and its share remains high compared to other currencies. The dollar's share of foreign exchange volumes is 88%, which is close to a record high. Over the last 20 years, its share of trade invoices, cross-border liabilities, and foreign currency debt issues has stayed the same. Even though US trade shares have been going down over time, the dollar is still the most important currency for transactions. De-dollarization, on the other hand, can be seen in FX reserves, where the dollar's share has dropped to a record low of 58%, Chandan said. What other coins could beat the dollar? In terms of competitors, China has been trying to make the renminbi more widely used around the world. But the renminbi's impact on the world is still small, even though it grows every year. This will be a long process that will need reform, Chandan said. For example, only 2.3% of SWIFT payments are made with yuan, while 43% are made with dollar and 32% are made with euro. Because China is becoming more important in world trade, it makes sense that the renminbi would play a bigger part in the world economy over time. However, this change would probably take decades, Wise said. lowering capital controls, opening markets, boosting market liquidity, strengthening the rule of law, lowering appropriation and regulatory risk, and promoting Chinese government bonds as an alternative safe asset could all help China and the renminbi become a good alternative to the US and the dollar. Getting rid of the dollar in oil markets. The oil markets are also showing signs of moving away from the dollar. Natasha Kaneva, head of global commodities strategy at JP Morgan, said the US dollar, which used to have a lot of power over oil prices, seems to be losing it. In the past, the dollar has been linked to lower oil prices. When the dollar gets stronger, the price of oil imported goes up, which makes people less likely to buy it, especially in emerging market (EM) countries. But more oil sales are now done in currencies other than the dollar, like the yuan. In a crucial move, Kanema said, Russian oil is now sold either in the buyer's own currencies or in the currencies of countries that Russia sees as favorable. For instance, some Indian refiners now pay for Russian oil they buy from sellers in Dubai in dirhams, while others are thinking about paying in yuan. Reports say that Saudi Arabia is looking into ways to accept payments in different currencies. Also, big Russian companies that make commodities have started to issue yuan notes. Rosneft, a state-owned oil business, sold 10 billion yuan in bonds to the public in September 2022. In March 2023, it sold another 15 billion yuan. Is the dollar really losing its power in the oil market? The price of Brent oil dropped by about 3% every time the U.S. trade-weighted dollar, USNEER, went up by 1% between 2005 and 2013. From 2014 to 2022, though, this number dropped to just 0.2%, and OECD oil stockpiles are now a much bigger factor in setting oil prices. Jahangir Aziz, head of emerging market economics research at JP Morgan, said, overall, we find that the dollar has become much less important from 2014 to 2022. It's possible that this change is caused too much by the rise in macroeconomic volatility brought on by the big jump in inflation after the pandemic and by politics, but it's hard to ignore it completely. Is de-dollarization about to happen? While some de-dollarization is likely to happen, it is not likely to happen quickly. This is especially true since a common currency has a lot of benefits and the US has had a network of alliances and agreements around the world for a long time, Wise said. It makes more sense for the renminbi to take on some of the functions of the dollar in non-aligned countries and with China's trade partners. This is called partial de-dollarization, and it happens when there is strategic competition. Over time, this could lead to nationalism, dividing the world's economies and money into separate areas where different currencies and markets play important roles. If you found this discussion on the US dollar's decline insightful, don't forget to hit that subscribe button and turn on notifications. Join our community for more in-depth analysis and updates on the ever-changing world of finance and economics.